welcome back to another episode of 10,000 Roads to Financial Independence. Today I have Nick Espinette. Nick is a colleague of mine and a great friend. So he is principal at Thrive Multifamily LC, and he's a multifamily syndicator and investor. He lives in Fort Worth, Texas. Nick has been passively investing in multifamily assets since 2016 and has been a syndicator since 2018. He's worked as a licensed physical therapist since 1996 and has run his own practice since 2012. His experience as a small business owner has set him up properly for running and growing Thrive Multifamily, a Texas based multifamily company. And Nick is currently an asset manager in four multifamily syndication deal totaling 580 units and passively invested over 1,500 units at seven properties. And my understanding is Nick is also have multiple properties in small market like tertiary markets and also growth markets. So we're going to get into a little bit more detail on that with Nick and their asset management experience today. Welcome to the show today, Nick. Yes.
Thanks for having me. I'm excited to visit with you today, Lisa.
Yeah, absolutely. So Nick, we always ask our guests, the first question is, when you think back in your childhood or your growth or even can be recent, who is instrumental in shaping the entrepreneur who you are today? Who or what incident?
Okay, I was kind of a late bloomer, but it's probably Rich Dad Poor Dad with Robert Kiyosaki or my wife's dad. He's kind of a serial entrepreneur, just always starting a different little business, has been very successful. So coming into that setting after getting married and getting to know, really dating, but getting to know him and seeing just some of the freedom that he had through, starting his own business or doing real estate. And he has a smaller, I think, 12 unit apartment complex and several little, some commercial buildings and some single family. But, so that got my interest started. And then along with my wife and then Rich Dad Poor Dad, Robert Kiyosaki's book really kind of just turned the light bulb on for me. So I started following other just the mindset of taking control and not having to be a W-2 employee and work for someone else and build their wealth while you're working.
Yeah, absolutely. And then so you were a physical therapist. How did you kind of transition out of that into, I know you still practice probably only on one client or so, it's more like a hobby now, but you reach your financial independence through apartment investing. But, like how did you actually transition from that career into, buying your first multifamily or investing in your first investments?
Sure. So I, being a more contract setting where we filled in or worked for, I would fill in for other people. Like if a home health company needed a therapist, we would come in and do the visits, or somebody's on vacation or maternity leave. And so being, it was more of I was PRN or part time. I could ramp up and ramp down. So on my first deal, kind of slowed down the therapy side while we were going through the acquisition process. Sorry, difficult word, but and then build it back up, because it took till really my fourth deal to where it started having a reasonable amount of income to be able to retire, have some comfort level. But like you said, I still keep my foot in the door a little bit, just with partly to keep in the business a bit, and I may eventually get out. But also, I have friends that own some companies, and if they need help and I'm not too busy, I'll go see a visit or two for them just to help out. And it's just getting to the comfort level that that I had enough income that I could cover my expenses. And a great thing about a physical therapist, there's always going to be a need. So if for some reason, and I don't suspect this, the bottom dropped out of real estate and we didn't have income, I could pretty easily get back into doing some. It may not be exactly the type of therapy that I want to do, but I could create some income. But I also like looking at other income streams out there too. My wife does some short-term rental stuff, so just looking at other avenues and that's more something so she could have something to do. But especially now having more of the entrepreneurial mindset, I don't think I'd have to go back to a W-2 or 1099 for long.
Yeah.
we
And
would
what is
find
that
another.
mindset? What is that mindset? You kind of mentioned about entrepreneur mindset. Like, what is that shift that kind of happens for you? What is that the biggest difference?
I think it's not feeling like you have to depend on someone else or a company, corporation for the job and security of having your retirement, your health insurance side, insurance set up to where we now it's achievable. You, but forever, if you had asked me that 7, 10 years ago, I'd say, oh, there's no way because you gotta have health insurance. You gotta have all the things that come with the security of showing up every day and getting a paycheck once every week or 2 weeks, whatever it is. But just knowing that you're having the mindset that may no matter what, we may be lean doing something, may not have money for a month or 2 or 6 months if we're doing it, but if we keep plugging away, that you will eventually get there.
That's
And
amazing.
it's that
Um,
comfort, that you got to be able to move away from the comfort of your 9 to 5 or W-2
right.
that guarantee money, but you're trading time for the money.
Yeah, which is kind of really setting a limit for entrepreneurs on the other side of the equation over here. And so Nick, this is very interesting to me. So you and I knew each other for a while. And from just kind of looking at the history of you guys' property as asset managers, you started from somewhere that is a tertiary market. And can you kind of share with us why you decided to go there? Because we know a lot of syndicators that talk about growth markets and like, so what are you kind of uncovered or in these markets. And in fact, that you kind of did a
Sure.
couple deals over there. Yeah.
So yeah, so we just a little high level on the market we're in. It's Abilene, Texas, which is about 2 hours west of DFW. Its population is between 125,000, 130,000, and the whole MSA is I think around 150, 160. But my business partner Brad Abbott and I were looking for deals in DFW, and we just kept getting beat back in late 16, 2017. And also at the time when we were first starting, we couldn't really compete with some of the hard money that was going and being required, day one. And so we thought, well, I didn't know about this book then, but the Blue Oceans book, where you get outside of the bloody water where the sharks are feeding and just get outside where there's still some growth there. It's not the crazy DFW growth, but it was, Abilene has positive job growth and positive population growth and has for a long time.
Hmm.
And it's a lot of people think of West Texas as being very fossil fuel dependent, but it's Abilene started, I think in the 70s or 80s, they really focused on moving, trying to bring other industry into their community that was not oil and gas related. So like the first, if you look at their 30 largest employers, or 40, the first oil and gas companies down in the 20s or low 30s. So they really moved away from that. So they've got a lot of diversification for a smaller community. So when we start looking at these secondary, tertiary markets, we want to look for positive job growth, positive population growth, and that they're not dependent on one industry. You want to see that there's a variety. So if one of those companies went away, that smaller community would survive. And one thing we really liked about Abilene, it does have a large Air Force base,
Hmm.
but they had right about the time we were looking, they were awarded one of only two air bases in the U.S. that were awarded the new stealth bomber. So we thought we gave us comfort that they weren't going to come in and retrofit this base for that new airplane and then move everything away. And then their second industry there is health and medical,
Hmm.
which if you guys are a lot of this mid-sized communities out in West Texas, they will serve multiple. Like I think Abilene serves 19 counties for
Hmm.
medical. So those smaller surrounding counties may only have one or two doctors or a few, but they don't have CT scanners or MRI machine. All the really expensive equipment is in Abilene. So if people are needing tests and things like that, they come into Abilene for that, or for the special, if they need an orthopedist or a neurologist that these smaller outlying communities don't have. So Abilene has a large health network, and then they do have three universities, colleges, not large ones, but so
Yeah.
that pretty fair size education employment sector too.
Yeah. Got it. Got it. So it's really kind of knowing the market really deep. And so how did you find that like competitive edge? I believe like you and Brad maybe lived there. Is that why like you had all these insight into that particular market? And then for our listeners who want to kind of establish that expertise, what would you recommend them to do?
Um, we did. So my business partner, Brad Abbott, he went to college there, and his mom and dad lived there, and my father-in-law lived there. So we had a connection, but we were looking in other areas out in that area. But what we did is we found the population size we wanted, and then we just started looking, doing research through a Bureau of Labor and Statistics, Texas Workforce Commission. Just you can find data that shows if there's been positive job growth, and I think you go back 50 or 70 years in the Bureau of Labor and Statistics and look at how the jobs have done. There's everything's cyclical as the whole U.S. economy goes, but
Right.
those were positive, and even Abilene, and I think Abilene has been through the pandemic, had the third best unemployment in the state per city, and all through when we've invested there, Abilene's unemployment was better than the state average. So that's a good thing. And you're not.
Yeah.
One thing we don't have in Abilene is they're not building much. There's been one maybe two deliveries since we started buying there.
Hmm.
And whereas DFW, there's apartments anywhere there's enough space to put one. They're trying to build them.
Yeah.
We don't have the supply coming in like you do in some larger metros.
Hmm. Yeah, definitely. So really kind of carved out being deep into a like a sub market that maybe have some edge. So I would encourage our listener like a kind of following what Nick is kind of talking about over here, like taking a look at these pockets that maybe has its own unique growth with diverse job opportunities, etc. Maybe a good way to kind of find your own blue oceans out of the whatever the shark oceans
Yeah.
out there.
You don't want to be in the bloody feeding area.
Yeah, the bloody feeding area. So Nick, I know like you are kind of primarily focused on asset management. Can you tell us a little bit about your system? Like what kind of system do you set up? Like when you first grow, like get into your first syndication, what that story look like? And then since then, what kind of system have you kind of been setting up for that?
Sure. So Brad Abbott and I, we divide up. He does more of the lender relations, communicating with them, putting in for our reserves, and I manage most part. He does some, but most of the project management, going over the property management company. So
Mhm.
I try to daily, but I'm not 100% on it. Looking at what our collections are, we're tracking them against. So a lot of this started at COVID, where I finally started building some stuff. We'll look at what we collected on the six, sometime like around 6 or 8 tonight, or before 8 tomorrow morning. I'll enter what we collected, what our collections were at the end of the day, and then I have that now. I've built enough where I can look and see where we were on the 16th for the last, I think 15 months back, and see if we're up or down. And look at that. I'll look at I want to make sure how many available units we have. So I always want to make sure we have at least a hand, one or two of every floor plan should be ready or very close. Because if somebody walks in and wants a lease, I want to be able to move them in if they're clear that they can move in that day. Because if not, they're probably going down the street to somebody else. That I don't want to miss that opportunity or have to put someone else off. So you're looking at the available units, and then looking at our delinquency if they're following up on the delinquency, making sure people, COVID, it got bigger. One of our thing I didn't mention earlier is one of the things we look for is locations with landlord friendly laws. And so Texas is usually pretty landlord friendly, but through COVID, that was changed, but it's now we can evict. But we have a handful of people that we have one guy that he probably went 10 months without paying him. We couldn't, which in Texas is crazy.
Yeah.
So he is being processed out now. Just looking to see what is the status. Nobody. I want to see something at least updated within the delinquent report once a week, about every 7 days, if not more often. And and then just look through. What if I don't do this often, but try to look every month or so. People with expired leases, are we billing them are they being brought up to market and being charged the month-to-month fee? We replaced a property management company that had some more challenges following that. That we have our new company seems to have more systems, and but I'm still going to be until I see that they're following through and getting these things, and then I may back off a little bit. But right now, I think we have to really track it. Obviously occupancy, but collections are a good indicator. Even right now, our collections are up significantly on some properties. I'm having them separate any charity from the Texas Rental Relief
Hmm.
program that's going on. I want it to be categorized separate than rent. I want to see what our rent is. So we're truly comparing what we were doing last June to this June. Even though last June there was some charity coming in, that was probably about the time charity stuff started coming through for COVID. So
Hmm.
it's still a challenge to know how much of that collection was charity and compared, but it's
Collection.
plus I don't want to say, wow, we got this great amount. It's it's probably going to dip next month because if we got a big back rent, and that shouldn't be going into rent anyway. Most of it should be clearing off the delinquency, but
Hmm.
it still makes our collections for the month look spectacular.
Yeah, exactly. So you want to kind of eliminate the anomalies and etc. That is a
Right.
lot of work to enter your incomes and etc. Looking at that on a daily basis. You have four properties now. Um, you may be having more that's coming up on the deck. So at what point do you feel like you may be breaking that scalability for someone who's maybe interested in being a syndicator? And so like what, because you want to kind of anticipate the growth before you get there. So what kind of system do you have in place for that?
I think my system right now is I have a 13-year-old daughter that likes to make money, so she enters. I've she's learned how to. I have a file for her to pull it up, and she's only $8. I shouldn't tell anybody
Awesome.
that. She's very inexpensive. So
Yeah, if you
she
listen
said
to the
well that
podcast, you will want to raise.
yes.
Yeah.
So she and I've told her if she has a spend a night with a friend, she can miss a night. But actually I do. I'm giving her a certain amount per month to do those. But then I even have her send emails for me if I have a template email because
Mhm.
sometimes our Mailchimp, a lot of it I think goes to spam. We don't have the greatest open rate on Mailchimp, so when I really want to get something out, we'll send individual
Mhm.
emails. And I've done it myself in the past, and it takes almost 2 days of sending each person an individual email.
Yeah.
I'm gonna, with I mostly do that when we're trying to raise capital because I want to make sure everybody gets an email. But
Mhm.
I will. She has shown. I've kind of worked her up, and I think she's shown the responsibility because it's really just putting the email in there, putting a first name, and
Mhm.
I shouldn't give anybody can do this, but yeah, it's not a personalized email because although when I do it myself, if it's somebody I've talked to in the last month or
Right.
two, I'll throw a sentence in there and go, "It's good to talk to you last week or last month,"
Yeah.
but it's otherwise we're sending out mass emails from Mailchimp, and half of them are I don't know, a large portion of them are getting stuck in people's junk folders or
Right. They've never seen it. Yes,
correct.
exactly. That's awesome. So start thinking about hiring out and etc. And then where would you say like so then you kind of moved it forward to some larger markets. So how do you kind of scale in different markets? Like why did you move to these markets? Yeah.
The challenge with Abilene is there's not as much volume. So now that we have a little more capability of being able to match some of that earnest money and have some track record with some of the larger brokers in those markets, we'd like to move, in Dallas, Houston, possibly San Antonio, just because you're going to have more deals trading. Abilene, there's one deal that was off market, and I think we've bought for the last 6 or 7 deals that have traded there.
Yeah.
Um, so it's nice. I mean, as much as I think Abilene's diverse, it's
Yeah.
probably nice not to have all our eggs in one basket there
Right.
too.
You're like the Lord of Abilene.
Well, um, I did find out we thought we might be one of the biggest or the biggest, but one of the brokers told me there's one other group that has a little more than us. So we are the second largest owner in
Hmm.
Abilene.
Yes.
And,
Yeah, creating your own
so,
blue oceans and become your own whale.
yes.
That's awesome. And so, can you kind of explain a little bit more about like having more transactions and etc.? I'm guessing like you do have goals to perhaps do more volume as well. Because I think one thing to note about you guys' operations, you see a lot of other groups that they kind of go massive growth, right? Everybody's strategy is different, but I know like you guys have been always been diligent in terms of let's test it out, get this over through a period of time, getting returns started, and then you start looking at the next one, which is very responsible way of doing that. So like, can you kind of share your thought process behind that? And there's there any learning you would say, well, I wish we didn't do that versus we did, it was the right path to kind of do. So
It's
we can kind of talk about
I think having a delay because the acquisition time is very labor can be between getting your PSA worked out, your fundraise, capital raising, which capital raising includes getting emails out, putting a podcast or a webinar out, and communicating, and then consolidating something. We have started a portal. This will be our first time to use a portal this go around, so that I'm optimistic that it's going to make that a lot easier. The last two deals we created our own DocuSign, went in and like two of the documents, and that took probably a half a day to a day. Not being a very tech savvy person,
Yeah.
it was a bit of a challenge, but we got through it. This time it's going to be handled, so it's going to add some cost, but I think it's going to free up some time. And we have come across a website, and my wife knew about it, but I didn't. But it's something that we give them the content, and they'll create our emails, make them look a little more professional and polished. I mean, I can get out MailChimp emails, but they're still pretty bland. I'm just trying to get something a little more, pops and draws more attention, and somebody that understands marketing, how things should be arranged on the to catch people's attention and something like that. So I think I'm getting off on a tangent, but we moving in that, and we're starting to scale by offloading the fundraising to the portal and the communications. We're getting that once we have it. We're setting up for our properties too, so we can communicate through the portal for our monthly newsletters, and we can have people set up for their distributions. Their K1s can be available there, and just kind of take in some of those steps off of our plate.
Everything, yeah, over there. That's great. And so, what would you say from being a physical therapist to a full-time apartment investor? Like the biggest transition. Obviously, they're very different, but the biggest transition for you in terms of like the mindset, and because you're doing syndication, you're going out there to actually raise money. So how do you actually get yourself conditioned to do so, and how do you actually
surrounding yourself with other like-minded people so you can see that it's achievable? If I was doing this by myself while I was still working my 1099 job, I would have got like the crabs that get pulled down in the bucket. I would have been pulled right back down with the others, been told you can't, it's impossible, you can't do it. But I joined a mentorship group, and just not only the mentorship group that helped educate me and teach me, but all the other people that were in the group, just we'd have networking events, and then talk with other guys, men and women that had achieved success. In you were one of them, that to see that somebody could come from different walks of life, be IT, a lawyer, a doctor, a physical therapist, all different walks of life, and just apply themselves and purchase an apartment. Because especially back then, I was a lot more skeptical. I remember thinking, is this some kind of a multi-level marketing? What's going on here? But the longer I was around, like, there's just way too many people that have been successful at other walks of life are now doing this. And so it wasn't a scam, and it was possible. And I was very nervous. Our first deal, we raised $1.5 million, which isn't all that much. Everybody can, that won't be that. But you're like, man, I'm putting myself out there, and it is the money. And we got it in a day, 24 hours. We didn't have a bank. We had verbal email commitments, and it was just like, wow, I can't believe that happened. Yeah. And some of them we've had to work a little harder, so we've gotten bigger raises. We actually have to kind of knock on doors more and work at it. But first two we had within one day, and then maybe 2 days, 2.5 days or so, we had a wait list started, which is a great feeling, because it kind of spoils you. Then the next one is like, oh, we went up to a $5 million raise, and we definitely had to make more contacts and follow up.
Exactly. And then so I'm guessing the unit counts also is difference as you kind of go, you kind of alluded to, because if you had a $1.5 million, I'm assuming the units counts are a little bit lower than that. So like a transitioning from like growing to one level to the next one, the biggest the difference that you kind of noticed, and the additional things that you have added into your operation.
Uh, we really, the first one, it's more just, I think Abilene was a hidden gem. We got our first deal at 37,000 a door
Wow.
for 100 units.
Yeah.
And so the second one was it was 124 units, or maybe for 6.25. But
Nice.
don't let the tax man know that. Edit that one. And then we went up to our biggest one was 228. Now you have it at the 228. It was a mid 80s property, in
Yeah.
a little nicer part of town. So the expectation for your tenant base is a little better. We did come in and repaint the whole outside, just try to freshen that one up more.
Mhm.
Whereas the ones that were some of the others, they didn't necessarily need that, but and then we went back down. Our last one, most recent, was 128 units. So, but it was in a little bit nicer neighborhood,
Mhm.
and the same thing where just a different expectation on the tenant base, a little nicer amenities. But now that the we're looking at a larger one in a bigger market, not larger, but it's actually quite a bit more per door, but it's not going to be the biggest by unit count,
Gotcha, gotcha.
just
So
because
it's
you're
kind
paying
of
so
like
much
more
more.
like moving the prices up or getting into a better market versus, so it's still growth, but you're not managing more. That's really
Right.
interesting. Yeah.
Yeah, it's not unit growth, but price growth, I guess, would be the best
And then
description.
looking at these higher priced units compared to like what you would bought before, and you could just have killed you before, like one that was like super low.
Yeah.
um what would you say the difference is? It kind of worth it to kind of trade up in the better location? I would assume so. Why would you go after the better location properties?
I think fewer. You should ideally you're going to have fewer skips, turn up,
Mhm.
um, the bad debt should be coming down. And you're more challenging as you get into nicer units because they can build. If you get nice enough, they're building another one just down the street.
Yeah.
But it's less maintenance issues as you start coming in, and I think it'll be more desirable when we go to list it to sell. It's going to be more sought after by buyers,
Yeah.
and but to be honest with you, the ugliest one probably is the easiest one.
Yeah.
It runs smooth and easy. It's all one floor. It wouldn't be what you'd look at. But it's all one floor, mostly
Mhm.
one bedrooms in it. But it chugs along, and just I wish I had 10 of them. Just like I look over the KPIs. I'm like, hey, everything's about where they were. And just steadily moving up. So
Yeah.
you know, it takes about 5 minutes of our hour. We do an hour call with our property management company once a week, and that oldest one takes the least amount of time.
Mhm. Got it. And when you take over a property in the first 60 days or 90 days, what do you do?
Okay, so as we take over, it's first just kind of getting the staff in and getting settled, making through our due diligence. We should have most of the skeletons, if there were any, hopefully found. But we always want to kind of make a splash as we come in with a new, if we're bringing in new staff, or even if we're carrying over the old staff, maybe do some type of tenant appreciation or welcome the new management, new owners, do something special for the tenants. But I think you only get that first amount, and then if we can, we will start working on interiors. But can we add an amenity, or if that's part of our plan, can we do something nice in that first 60, 90 days? Now, if it's going to be something bigger, it may take longer from the
Yeah.
construction side to get that done. But I think it's important to come and show them that you're not just taking over and making things worse, even though, because you may be coming in and change. People don't like stuff changed.
Right.
At the very worst, you're changing the way they have to pay online, and they may have to pay with a check for 30 days until you get everything switched over. So you're causing some inconvenience in their life. So try to do something nice so they see that they're getting something for their inconvenience.
Yeah, absolutely. So, what is your, because now you have 500, like almost 600 units over here, and I'm guessing like it next up this year, you're probably gonna hit 1,000. So what is a kind of like a mid-term, long-term, goal for you or why for you of keep on doing this? Because now you've reached financial independence.
A lot of it is um, I have three daughters, and just being able to travel more freely when we want to,
Mhm.
from not have to ask off, but and you hit a certain number of units to where you can hire an asset man, somebody that can watch over that stuff, and
Right.
I can leave for a month on a vacation to another country and not have to feel like I needed to check my phone or email
Mhm.
on a very frequent basis. But just having the freedom to do that, or I have a colleague that he has a one younger daughter, and he's spending. They had a van completely retrofitted to live
Yeah.
out of. They're spending a year driving around the U.S. Wi-Fi and everything set up so he can set up and still do his real estate stuff from in the middle of nowhere with a satellite Wi-Fi. You're just having the freedom to do something like that if we wanted to.
Yeah, that's awesome. That's awesome. And so last question we asked is that so you have daughters, you have three kids. What are you doing to kind of set them up for financial success into financial literacy, teaching them financial literacy?
One is I try to discuss what we're doing, but it's funny because we actually just bought a snow cone business, or we didn't. My daughters, we have it set up where they have the infinite banking life insurance policy that's way big tangent to get on, but they are taking their loan out of that to
Yeah,
buy this. It was a girl from their school started it 3 or 4 years ago when she was a sophomore, but she's been
wow,
off to college and has come home the last 2 summers and run it, but she just decided she can't do well enough with it. So it's funny because the girl, my wife, reached out to her when she saw that it was for sale, and the girl wanted to meet with my wife. She's like, "No, we want our daughters to come." So we went and met at a coffee shop and had them ask questions. Is there anything one of my daughters was looking up? And when we finished, she goes, "Oh, I think it sounds great." But so I was like, God, I need to talk to her about body language and eye contact
yeah,
when you're talking with people, even though you may be paying attention. If you're looking all over the
yeah,
place, she doesn't think you're paying attention. It's distracting. It was funny, but they've gone and done a training with her, and we're getting it set up. And we've got it's not a big go inside one. It's outside, and it's going to be
yeah.
it's no artificial flavors, no corn syrup.
Nice.
I don't know, it's more of it's not 100% organic,
Natural.
but it's a healthier.
Yeah, yeah, it's a
We
natural.
did learn there's difference between shaved ice and snow cones. Snow cones are like the chipped up ice, and a shaved
Yeah,
ice is more like snow. So
yeah,
this is a shaved ice one, but it's and they were pretty good. We got to try a few of them.
nice.
So that just teaching them to go through that process, teaching them how the interest works on it,
Yeah,
and I, it's going to be interesting the three of them working together because they're buying it together and
yeah.
see who's going to how the
Partnerships.
work.
Yeah,
Yes, how when and who. Yeah, one of them's 9, so she wants to do all the fun stuff. We're like, you got to rotate with everybody. You got to do.
right.
Everybody's got to help clean up. Everybody's got to help do the certain parts. So doing that, and a great game. Anybody listen, if you haven't, it's back to Robert Kiyosaki is a um, cash flow game. It's a board game, and it's great. It's we play that probably not often enough, but a few times a year, and it's you kind of see the scenarios of investing in different type of things and your return on investment. But doing some things like that are fun because a lot of times dad sitting at the computer for 10 hours a day is not what they want to see when we're trying to get a deal.
It's not very rewarding.
But or when we're traveling somewhere and we have to stop and drive through some apartments as we're going through a town.
Yeah,
So I've had to tell them like these apartments paid for our trip we're going on. So everybody
right. Making a connection.
don't complain about an hour little detour over to look at some apartments.
Yeah, that's awesome. That's awesome. That's awesome. Well, thank you so much, Nick, for your time today. And how does people find out more about you? Where they go find more about you and Thrive Multifamily?
Yeah, they can email me at Nick, NIC, there's no K, so NIC at Thrive Multifamily, THRIVE, multifamily.com.
Mhm.
And I will reply back and with my Calendly link, and we can set up a call. I have a 10 or 15-minute call set up through my Calendly. I'd love to chat with you and just share with you my journey and how I went from basically having bought two single family homes that I lived in, my own personal residence, to my first purchase. Syndication was a 100-unit property, and now at 4 with 580 units,
Yeah,
and looking to ideally do 1 to 2 deals a year going forward in larger deals in larger markets. So if I can do it, anybody can do it.
Yeah.
Just got to take some persistence and continuing with it.
Yeah, amazing, amazing, Nick. I always it always struck me how down to earth you and Brad both are, and how helpful you are. Like Nick actually has shared some renovation process documents, scopes, and etc. with me early in my career as well. Thank you so much for being on the show, Nick. And then
You're
for all
welcome.
guys,
Thanks for having me.
yeah, definitely, guys. Like, check out his contact information. Contact him. You know, that could be one act that you did that make a difference. Cool, awesome. Thank you so much, Nick. Yes.
Thank you.